Cheers to the 88% rule retail trading team. It's another routine debrief, and today we have a full glass of wine instead of an empty one. And yeah, so first we're going to talk about what that 88% rule is, and then we're going to jump into the charts. So once again, cheers. I'm going to take a sip. I'm going to mute myself here. Beautiful. And yeah, we're going to jump right into it. So, what is the 88% rule? I like to reference it a lot, so I just want to um, cover what that means. Um, so 88% of the time, when a 5-minute candle closes either above the IB high, IB is initial balance, that is the range that goes from high to low at 10:30 of the RTH session Eastern time. Every time that a 5-minute candle closes above or below that IB high or low, it's telling us that either the high of the day is in or the low of the day is in. So let's just use today for example. When we had that 5-minute close below the IB low, 88% of the time that is going to signify that the high of the day is in. And this is actually the fourth time in 9 sessions that that rule has been violated. So that's just a fun fact for you and a reminder that outliers cluster. Okay, so cool story. That's just the beginning of today's Johnny Wynn's favorite puppet show, and now we're going to move right into the warm-up review. So that's what you're looking at on the screen. This is what I call the routine warm-up. It is in the description of this video. You'll see a little blurb that says warm up with me here. It's this document. If you've seen any other videos, you've heard me talk about it. This is completed by 10:30 Eastern every day. So when you don't have this video, you don't have the newsletter, this is what I'm looking at to kind of gauge my sentiment for the day. So I'm just going to look at a couple things that are highlighted, uh, kind of just reviewing today's session real quick, and then we're going to go from there. So the first thing that we saw that bearish defense of our breakout box. Today was a breakdown box. It was from 3019 to 3070, and what you tend to see with these wider boxes is they tend to behave like bounce areas. And so you could think of today 3970 would have been the bounce area high. Obviously, we never got there. We never even got to the gap, and then that 3915 was the low, so kind of the low area of value on the day, and that's right about where we closed. So the Bears definitely defended their position today. It's going to be interesting going into tomorrow. For me, that I'm really watching two very specific areas. I'm watching that 3900 low and really down to about that even 3875 in ES as that kind of primary demand zone for tomorrow. And then again, if we do push higher, how do we behave at that gap? It's about 39.45 on the ES. Are we gonna? So there's three things that happen at the gaps. You either have what are called a gap and goes, which is we go into the gap and we keep moving. You have a gap and crap, I believe is the formal term, which is where you go into the gap and you immediately reject, often making a new low. And then you also have the I'm not really sure what the technical term is, but we'll call it the gap and sit, where we go into the gap area and we just kind of consolidate around there, and it's really good iron fly territory. So just real quick, that's kind of the main thing I'm looking at for tomorrow. We'll be looking at our pivots today. We had two things that implied chop. First, you had the volatility expansion here, which was telling us that we were going to see that same trend that we saw in the VIX yesterday, which led to the same type of trend day in the equities. And we had the open auction again. So yesterday's open auction resolved to the downside. Today's was more characteristic, where we kind of had that two-sided choppy action, albeit wide extensions on either side. And besides that, I just want to point out that the VIX VIX did close slightly higher. We're still kind of in that 20 handle. You hear me talk about it all the time. This is kind of really important pivot point for the VIX. And it's going to be interesting to see, do we continue like we have, where we kind of reverse from that 20 zone, or are we going to finally get that rejection and resume the bull market? So if we want to jump right into the charts themselves, the first I want to look at is just our macro chart. Okay, so a couple things. The first being, you can see, I'm going to do a cool little arrow here. We do have that, that's a crooked arrow, but you get where I'm pointing. We do have that RSI reset. We were in that overbought territory. Now we're kind of falling back toward the middle. So for the bulls at least, Um, this could be an area of potential recharge, and we're going to look at it on the 4-hour chart to be a little more granular. And you can just see just how much that we have sold off, and what has really been a small move. But in terms of momentum, you can just see how far we have retreated there. And we'll talk about why it's important in a second. So that's the first thing on this chart. The second is I want to bring your attention back to our POC. I'm going to draw a more accurate arrow this time. So it's still at about that 39.90 area. We have ostensibly, to use a fun word, lost that POC. And if we do make any type of significant move tomorrow, you can kind of see that gap in that 40 area. If we do push in there and have some type of significant squeeze, that 39.90 area is really going to be the most important point to see if we do accept back in there and make a move toward the highs, or do we get rejected there again. Again, I want to keep it, especially just kind of for the intraday perspective. It's really all about what happens at that 45 area. 90 is 45 points away from that 45 area, and would be outside the expected move were we to go anywhere near that tomorrow. But I just kind of want to keep that on the wider, the larger scale, bigger picture time frame. Just kind of want to point that out. So yeah, so then the final thing on this chart is looking at our volume today. Again, you can see, I'll zoom in here a little bit. We had that higher than average relative volume on the day. So you do have a lot of participants in the market relative to the past, I think it's about 30 days or so. So there's a lot going on under the surface, even though today we didn't really move too much in terms of price action. There was a certain amount of positioning. I'm not sure if it's for expiration tomorrow, but kind of around that expiration day, which again, that's going to be tomorrow. Let's move to the daily chart. Really only one thing I want to point out on this one is if you look at the first demand zone that we were finally testing, 1375 was the top of that. We popped right into it and really popped out. I think the low today was 3901.75. And yeah, we didn't really get too far into this demand zone at all. So to me, again, I see this for now as just a pullback. I do have an overall bullish perspective on the market. We'll call it a bullish to neutral chop until we get above that trend line. But you can see we moved into that demand zone today and immediately retreated out. So going to be watching that 13 to 833 zone. But really, again, for me, if we start to get below that 875, that's that triangle support. So just want to reiterate, triangle support from about 875 all the way up to 3900, and then the gap 45 area. Those are really the two areas I'm watching closely tomorrow. But if we start to move below, we start to break this trend line, it's very possible we see that false break until we start to, until 833 fails, this zone will disappear. But really, for me, it's at 875. I'm watching 875. What this is just telling me is that there's plenty of demand hanging out here, at least at these levels. And yeah, that's so tomorrow, if you want a visual picture of what that triangle support is, it's this trend line here, right at about 80, like I said, 75 to 900. I don't know if you want to be specific. I think it's at about 82, but you get my point there. So moving on to the next chart, which is going to be our weekly chart. Just kidding, we're not quite to the weekly chart. We're going to go to the 4-hour chart and revisit that RSI comment. Okay. So I said when we were looking at that macro chart that we did have the minor retreat in RSI, and you can see it much more dramatically here in the 4-hour. So 4 hours we're currently in that oversold area, and I'm watching this. This is a lost zone that the bears were able to take out at the end of the day here. So I'm watching to see if 27, 28 area holds any sort of supply. I don't expect to. I fully expect us to break this probably before the morning. But if we don't, you can see that this 2027 zone, it's one of those lost zones. It's going to be kind of the first area of supply before price can make any type of move. So watch that 20 area. I think probably by the time that most of you watch this video, if you are even watching it within 12 hours or so, that might be gone. But I just wanted to point that out on this chart. And finally, just to go back to that big picture view, what I'm talking about, why am I still bullish? I'm still seeing this big picture inverse head and shoulders pattern. You can see it very clearly here, and we're still just building out that right shoulder. So really, to me, um, if you're just looking at raw price action and truly big picture, it's still just a bullish pullback until they retake that triangle. We lose that triangle. It's still just a bullish pullback, in my opinion. Okay, so moving on to the chessboard chart, my personal favorite chart. The 30-minute TPO, by the way, for anybody who's wondering, kind of where this chart comes from. It's a 30-minute TPO chart. And today was an interesting one. It was one of those rare non-trend type days. So if you go to the routine review strategies, that Google folder there. You can go to the warm-up TPO. You can see exactly what a non-trend day is. But so we had today. It's that D-shaped profile where really the auction is pretty well balanced throughout the day, and there's no crazy imbalances once we kind of got our range. So today's range was obviously from that 39.0175 low all the way up to about that 40 area, not quite sealing the gap, but still we're finding for now a balance in this area. Obviously tomorrow's expiration, I do expect that to change, but that is what we're seeing for now. And just for tomorrow, I've said it like 5 times already in this video, but just one more time, this is really the key point, and I think the most valuable thing you can take away from today's video. 3900, 3875, it's a wide support zone. It's probably pretty strong. It's the retest of that triangle, and we want to watch what goes on down there. And I really think that the primary supply zone is pretty close. It's that gap area. If we do accept to the gap, we're probably going to go retest that POC. But we first want to look for either a rejection or consolidation in that gap area from about 39.45 to 39.50 in ES. You can see here that will be near that prior week value area low. We got a couple singles on the way up. We got a naked POC at 67, but I think really it's going to be near this prior week value area low where we start to see some type of significant reaction or no reaction at all. So um, yeah, so I just want to point out that level one more time. And I just want to point out the stack supply that we do have all the way up to that prior week POC, which is also the POC of the year, and also what I see as the bottom of our supply zone. Okay, so moving on to our hourly chart, which gives us some insights into volume. So we still have that strange shaped. It's a B distribution, but there's a really quite a bit of ugliness and space in between, which is why I'm saying we could see that squeeze come fill some of this in. And again, it's going to be that 45 to 50 area. You can see here a notable aspect is we have a bunch of sell delta there, which is just telling us that if we do start to push above, this is going to be what I think of as squeeze fuel as these shorts try to cover their positions. You see the RSI reset here. It's not as dramatic as on the 4-hour because this is the shortest time frame. But again, we're in the middle. We're still oversold in that 4-hour. There's nothing super notable about that in terms of RSI, but it's kind of telling us that we're not oversold, we're not overbought. It explains why we have that balancing type activity, I think, and we just want to see if they corrected on that 4-hour and what that looks like. Okay. So just one more thing on this chart. In yesterday's video, I said that I did not think that we had the conditions for a squeeze for today's session. That was correct, but I do think now there's really some significance around this gap. I think that there is squeeze fuel if we start to go through it. So just be really mindful of our primary supply zone for tomorrow as we look to see if they have any type of expiration trend or if we chop or if we go lower. So we have our levels in that aspect. I don't need to keep beating that dead horse. So we're going to go right to volatility and start to wind this thing down. So volatility chart, you can see we have a decent base, but for me, short-term at least, this looks very much like a head and shoulder. We had that double top look yesterday, which did not turn out to, to resolve to the downside, but you're seeing it again today. And I think it's a little more dramatic today because you have the top. So I'm going to go ahead and put an ellipse over this. You have the top, and then you also have this kind of head and shoulder type look where this right shoulder is building. So we'll see if Vol gives it up tomorrow, or if it at least kind of pulls back a little bit and starts to consolidate. But to me, this is not suggesting that we're going to see any type of dramatic down move. at least until something changes in the volatility sphere. So you can see that that would be at about 22.55. Really, I'm watching that pivot high at 22.70. So right now we're just kind of consolidating around this is weekly, by the way, weekly pivot high, weekly pivot low. We're kind of consolidating at the weekly pivot itself. I want to see if we get some type of strong move above it. If we stay around it, if we start to go to the downside, just to kind of gauge the strength of any move that we start to see tomorrow. It's I think the levels are simple tomorrow, but the trading could be complex. So you really want to use I think volatility to your advantage. Um, I don't think OpEx is going to screw it up too much. I know we've been seeing a lot of weird volatility action with the market volatility up, market down, volatility down. But I think it kind of normalizes when you have these types of sell-offs. So that's kind of what I'm going to be watching in this chart. Like I said, that 2165 is kind of not kind of, it is the pivot for the week. So where do we go for 2165? Do we consolidate around? Do we start to see any type of significant move, any reoffer, rebid around that 2165 area on the volatility? Okay, because as we know, I've brought it up earlier in the video, but I got to keep reiterating it because I think this 20 area in the VIX, so keep in mind this is VIX futures, VIX does not have volume, as my voice cracks. So looking at that 20 area in the VIX, throughout the entire bear market, this has been where we reversed back to the upside. Now that we're kind of in the zone, are we going to reverse to the downside and resume the bull move, or is it going to follow the past year and start another leg down? As you know, I do think that the bear market ended on October 13th. So if this move does turn out to be a pullback, it's going the next important level. Once we get to the 3990 pivot, again, this is looking out probably next week and maybe the week after. What happens when we do confront that trend line again? I think that's currently all the way up at 4055, but that's really going to be the next major level once we get past that 3990 area. And that is all I have in the chart. So I'm just going to bring the warm up again one more time to direct you to this. Again, this is completed every morning by 10:30. Um, it's very kind of the basic metrics that you need, I think, to help you form a good trade plan for the day. So you can access that in the bio. The website in the bio, retailtrading.com. I'm still working on moving over to Substack. It's kind of hard to do during the trading week, and frankly, if you can't tell by my inconsistencies, I did not, with timing and everything, I did not prepare for this well. So I'm sorry, but I will get that up for you this weekend. Yeah, if you click on retailtrading.com right now, you're probably going to be taken to some weird pages, or whatever the review page is, because review shut down. Yeah, you'll be taken to a strange page there. Uh, Anyways, point being, just don't worry about the website for a few days if that's cool with you. Um, in terms of that move from review to Substack, I do have everybody's email. If you unsubscribe, that is perfectly fine. I hope that you do stay subscribed when you receive the new email. I will let you know when that's coming. Again, that's going to be this weekend, and we're gonna get going on that newsletter, nice and consistent. Once again, we gotta. I say we. I have to find a time that I think works best to give the best content for these videos. I think that these evening sessions, you get a lot more out of them because I have more time to look at the charts. And we'll see if the newsletter, perhaps we'll send it out earlier in the morning, just kind of with that prior day's video. I'm talking to a couple people right now, and we're going to decide on that this weekend. And checking my notes here, that is all I have for you today. So, as always, please feel free to comment on this video. I will answer any questions I see in those comments. And also, please feel free to tweet at Routine Trader with your thoughts anytime. I have 65 followers who I cherish very much, and I will definitely respond to you on Twitter in that way. So yes. Oh, one more thing. If you're watching this video and you thought it brought you value, please do give it a like because that does help with YouTube's algorithm. Um, I am trying to build some type of an audience here, so that will help me out a lot, and I'll appreciate if you can do that for me. And regardless if you like it or not, I do hope that you have a good end of the week tomorrow. and I will update you sometime this weekend with all the fun analysis. And I look forward to talking to you then. And until that next contact, I wish you the best of luck and hopefully you can stay classy.